I'm Hans Lysglimt, and this is the Freedom Academy. Now, a lot of people have asked me about the markets and investments and how the market is going to go. And no one can be sure about how the market is going to go, but if we look at the broader markets, we can be sure that there are losses out there, massive losses that have not yet been revealed, and these losses will spread through the economy. So what we have seen now during January, February, and the start of March 2008, today is March 6th, is that some of these losses have been surfacing, but there is a lot more, and all the losses in Citigroup and all the banks and all that are going to spread in the economy. Someone is holding the shares of Citigroups and other financial institutions, and they will have to write off their assets. And will just go on and on for cycle and cycle. So it'll be a year or two or three before this is really over and that we've bottomed out. So I'm not giving financial advice because I really wouldn't do that. But I can say what I'm doing and what we are doing among my friends, and we're getting out of the market. We're selling shares and assets because as this recession gets going and gets momentum, people are going to need to sell. And that will bring down prices. People are going to need to sell their shares and other assets. People are going to need to sell their homes. People have been speculating in buying several homes and condos, and now they're being squeezed by the banks. They need to sell. And this takes time for everything to really roll through the economy. So there's a lot of selling pressure. I mean, there's thousands and tens of thousands and hundreds of thousands of homes and billions of shares that need to be sold to pay back debts to the banks that are pulling back credit. And this is going to bring prices down. So what you want to do is you want to assemble as much cash as possible. That's what I'm doing. Again, I'm not giving advice, but that's what I'm doing. As much cash as possible, or cash equivalents, bonds and money market funds, so that when this thing bottoms out, then you can buy at the fire sale. I mean, it's going to be possible to buy stuff at 50 cents on the dollar, maybe even 20 cents on the dollar if this recession really becomes bad at some point in the future. We don't exactly know when that is. Maybe it's this winter, maybe it's next summer, maybe it's 2 years or 3 years from now. But you really have to be patient. Sit on the cash and be patient until the time when there really is a fire sale. Now, what you will have to remember is that when this fire sale is going on, that's when everyone has pretty much given up and lost confidence, and people are saying, "Oh no, this is the end." That's when you want to buy. So it's really hard to prepare yourself for that, because you too will be very discouraged, and having read bad news in the newspapers for months and months, you will say, you will be afraid of going in, but that's the right time to actually go in. I will try to identify when that is, and I'm really working hard on myself to prepare for that. If it takes 1, 2, 3, 4 years to really be a contrarian as to that, because when the right time to go in arrives, we are going to be pretty beaten up, everyone. So you really have to prepare now to be in a mental stage then to go in. It's going to be a really tough one. But okay, patience, cash and patience. Now, people have asked me especially about gold and silver, precious metals, and the thing is that we see this rally in gold and silver, and gold is just about to break through the $1,000 barrier, and silver just broke through $20, and that really gives a lot of people the signal that, wow, I should get into gold, should get into silver. But I want to be careful about that, because in a recession, people are going to need cash. And that means that a lot of people that are holding gold will need to sell their gold and silver as well. So what usually happens in a recession is that the price of gold and silver goes down. And I expect that is the most likely scenario this time too, that at some point maybe gold will go to 1,000 and 1,100 or 1,200, and then it will turn, maybe this summer, maybe this fall, and start falling because people need to sell off their gold. And this really comes from an understanding and an analysis of the monetary policy that's underneath all this, because the Fed and the banks are pulling back now and being more careful about credit. So there's a deflationary tendency out there. Now the Fed is also pushing to get more money out in the economy. So there's a deflationary, I'm not saying there's deflation, but there's a deflationary tendency in the banks pulling back credit. And then the Fed is inflating to counter that, so that the net will be a slight inflation as the Fed wants of a couple of percent. But you have to see these forces are working in tandem right now, and the deflationary force is the one that I'm most afraid of, because that's where people will be forced to sell their gold, sell their silver, and then the new money that the Fed is pumping in, we don't really know how that is going to show up in the economy yet. There's always someone who gets that money first, and then they go out and do something with that money, and it's hard to predict what's going to happen there. But we can be sure that people are going to need to sell assets to cover their credits that are being pulled back, and people are going to sell gold and silver. So be careful about speculating in gold, in contracts, and the mining companies. You want to hold gold as a hedge towards a total collapse in the economy, because if it really goes down, and there's a slim chance of that, we hope not. We hope not that everything will crumble into a rubble out there, but there's a chance the financial system might break down totally, and then it's gold that will really save you, that will carry you forward. But that's almost like an insurance bet. You hold some gold, physical gold, as an insurance towards really, really hard times. That's not really an investment or a speculation or something you do to make money. It's a hedge against a terrible downside. If that scenario happens, then it's going to be really awful for everyone. And the gold that you have is your hedge against, starving to death, I was about to say, but really getting the necessities in a really bad downturn. Let's hope that doesn't happen. So that's not an investment or something that you will think about as making money. That's setting aside 5%, 10% of your net worth into physical gold that you have physical control over. Speculating in gold and silver or oil or commodities, no. We're at all-time high in a lot of commodities, and you should always be very careful to get into something at all-time high. It's usually smarter to get out of something at all-time high and buy at low prices. So keep the cash equivalents, sell shares, sell houses, sell property, and sell commodities, sell gold and silver, and wait till the prices are good again. If I were to invest now, I would invest in myself, invest in becoming a more knowledgeable, more skillful person, invest in education. That's your best investment right now. You can get double digits or triple digits return on yourself, investment in yourself. But speculating in the markets, be careful. Be careful. That's what I do. This is not investment advice. This is what I do.